Welcome to Live Market Analysis USA edition. My name is Carl Capolingua. I'm the market analyst over here at ThinkMarkets, and it's a pleasure to be with you as we head stateside to hopefully find some great trades, but possibly, given the way things have been going over the last couple of weeks, to pick up the pieces of our portfolios. Let's hope it's not that bad. The agenda for today is pretty simple. It's an Ask Me Anything session. Hopefully, I've got the answers for you in terms of technical and fundamental analysis, but it really is about getting your portfolio questions answered today. If you're watching me on the Zoom session, you've definitely got your chat window and Q&A window there. If you're watching me on any of the streaming services, you also have the ability to do that, and I endeavour to get to everybody's question today. Let's head over to the charts first and foremost, and we have just on screen here, just by pure accident, for people that follow me locally, you know I just come out of a session on a local media outlet, but I've just been talking about interest rates and the like, and just happened to have this chart up. That's the chart of the US 2-year Treasury note. You would see there, it's been actually pretty flat over the last few weeks, mainly because the market is kind of predicting the Federal Reserve is probably done. There's an inkling of a chance that there's one more hike. I think we're pricing in maybe a 30% chance of a hike in November, which means there's a 68% chance of a hold. And really that the probabilities of a cut are increasing now. The first one coming in March next year. I did do a tweet to catch my Twitter. I put a graphic on that. But the reason why I'm here, I just wanted to show you the twos, which are trading around about 4.85% over there, you can see, and the tens, and look at that big white candle. If this was a stock chart, I put to you, we would be buying it. It's not a stock chart, it's a chart of the yield of the 10-year note. And this is typically, look, depends on who you are and your time frames, but often this is the one that is used as your risk-free rate. So you're familiar with my spreadsheet, and I often talk about how when rates rise, the valuations of companies, the valuation process becomes more punitive. We more punitively discount those future cash flows. So as this goes up, values of companies or the value that investors will sustain or accept for a company comes down. And if you will accept less in terms of price and you want more in terms of value, the price has to go down. So this is hurting the NASDAQ at the moment. It's hurting stocks in general. And I just want to point this out. This is at 4.12 here. So if you add 4. And this is what I do, because what's my investing time frame, and everybody will different. But this is not mine, but I think fund managers are looking at somewhere between sort of 2 and 10 years as an investment time frame. Maybe you've got a different opinion. I think that's pretty reasonable. You're a big fund manager right now. You're looking to invest in US shares. Your time frame is between sort of 2, which is the lower end of sort of short term, coming towards medium term, and then 10 years is your long term. Okay, so if I take that 485, I take the 412, I divide it by 2, you get 4.5%. What the hell is the real? Why has Carl started here? What the hell is he going on about? I just want to point out something I don't often talk about, and this is sort of how the market works, sort of stuff. Okay, so this is my fancy spreadsheet, and Goldman Sachs, UBS, Citigroup, Bank of America, Deutsche Bank, they've all got their own fancy spreadsheets like this. Okay, I think mine's better, but hey. And somewhere in that fancy spreadsheet, one of the analysts at Goldman Sachs, their only job, they're getting paid $400,000 a year, and their only job is to update this cell, which is the risk-free rate. Now, Goldman Sachs will have their own methodology for doing it, but like I said to you, I like to look at the 2-year yield, the short to medium term, and the longer term. Some people just look at the 10-year yield. Now, if you Google it, risk-free rate, what is the risk-free rate? I bet you'll see 10-year yield. Okay, I add them up, divide them by 2, I get 4.5%. So you can see here, 4.5%. Now, if I jack this up, if I go 5%, actually, before I do that, let me get this right, and then you'll see what's going to happen here. So the fair value of Tesla is based upon my model, default model, is 315.60. Now, if I jack this up to 5%, right, the fair value comes down. Okay, if I jack this up to, let's take it up to 10%. Okay, let's take it down to 1%. Okay, bang, all of a sudden Tesla's a bargain. What I'm trying to get across to you here is how the market works and how important those interest rates are. You can see my setting there is 4.5%. I've told you why, but as the yields go up, stocks are more punitively discounted by the market. I've got to find the word, more punitively viewed by the market. There's a word in there I'm not finding. Anyway, let's keep going. Hopefully that made some sense to you. Hopefully it was there some value to you. Otherwise, I just wasted 4 minutes of your life. But I will now go to Perry. In fact, Perry's confirming that he can hear me and see me. Phil has got the first question with Zillow. So let's head over here. What does all of that mean to a technical analyst? Not a lot. Nothing, really. But for all of you fundamental analysts out there, that's important. Let's go here and here and here. Okay, I still think it looks good. No problems here with Zillow. I'm impressed. I'm actually very encouraged by 1, 2, really here, 1, 2, 3, 4, 5, 6, 7 out of the last 10 white candles, and even the 3 black ones, lower shadow, lower shadow, lower shadow. I think this is hanging on admirably. I'd be a happy holder here. I don't think there's any reason to manage your risk on this one at this stage, Phil. However, let us not blind ourselves to the fact that the Nasdaq is not looking that good. Let's have a look at just quickly. We've talked about this. We talked about this on Thursdays. Russell coming off. Okay, there's some problems here. So let us be alert, but not alarmed today as a theme. Happy holder. And I think therefore this discussion of where things could go wrong becomes even more important. Okay, this here is the key level for me. This candle, because it was at this candle, you can see, look at this close here, we actually gapped down. There was actually a big gap down, probably earnings report this day here. Gap down, on the face of it, market didn't like it, short sellers came in, people panicked, got out, but the demand was there. The big money, the serious money, the money that matters, actually started to buy and pushed and pushed and pushed. And then supply got the picture. The supply said, oh, actually, there's some serious demand here. I better stop selling. And then we accelerate into that close and we get the next white candle. So this is where all the demand is at. Okay, this be where the demand is at. Speaking gangster here. If we get down there, close with a big black candle, close beneath it, it's telling you that demand does not exist anymore. It's gone. That can be the only conclusion that you can draw from this. And if that demand has run away, why the hell would you still be holding on to this company? If you're not happy giving up that much, I would suggest, well, you probably shouldn't be here. If you're not happy to give up 10% in a trade, maybe trading's not for you. But otherwise, I think it's fine. If you want to get out in a more conservative fashion, Phil, let me know. I'll find another level for you. But otherwise, happy holder. If I didn't have this one, could I be buying it? I'm just going to get rid of all of those for a couple of reasons. Number one, I'm in the wrong place. And this is where we should have. This is where I should be doing all my scratchings. So you can see here that in the past, we've talked about buying on this day here. I think that's a pretty good candle. And then we actually talked about it maybe on this day here, or maybe this day as a buy. So happy to hold on to those two. I'm not going to buy it today. I'm not going to go plus 1/3 today. I'm not going to copy and paste that because of these last two candles. I don't think warrants that just at this stage. So it gives you a bit of an idea as to how I do things. Let's keep them coming. Perry's asking about AGM, which looks fantastic. So let me just adjust my headphone here. No complaints there. Going to double click on that to get that scale right. I'm going to go zoom normal to make sure I can see everything I need to see. If you're wondering what my default zoom is, that's a good question. But we can see we're going back to, there's August, back to April before. It's about 18 months. There is a specific number I can set here somewhere, and I can tell you what it is if you're wondering, and you can set up your chart the same. You can't see this menu that's just popped up. 375. 375 days is my default zoom. That's where I like to start. And if you're wondering why 375, I'm going to go 375 divided by 252. And if you do that in your calculator, you get 1.5. What does that mean? Well, 252 is typically, there's a few less in Australia, there's a few more in America, I think. Anywhere between 250, 260 days in a year, okay, once you account for your public holidays and weekends, I should say. Yes, I know there's 365 days in a year. Take out weekends, take out public holidays, you're somewhere around 250 to 255. Times that by 1.5, you get, therefore, 18 months. That's my default zoom. Okay, Perry, I like this one. Can I buy it? I can't see any reason why you couldn't buy it. I tend to say that a lot about Perry's suggestions. I also tend to say this, well, Perry, I know that I wasn't here on the Tuesday, and I know you know also that these are all great buy signals, and my job is to draw 10,000 of these arrows to tune your eye in, because that's how long I've heard it takes. Professional sports people, they need to do things 10,000 times in the right way. Perfect practice makes perfect. Not practice makes perfect. Practice doesn't make perfect. Perfect practice makes perfect. So if I show you 10,000 perfect candles, your eye will know exactly what they look like. There's one there. That looks really good. Interesting, if you got in here, you probably would have got out around here. So if you went plus 1/3 here, look at this. This is a failed trade. Plus 1/3, minus 1/3. Just when you didn't want to get out. How about that? If that bothers you, click stop. Go do something else better with your time. I like it here. I can't fault it. The short-term trend is great. The long-term trend is great. It's just great. It's just awesome. I can zoom out all I like. I'm not going to find any supply points above it. The only question for me is just the proximity to, or the lack thereof, to the light green zone. And in this sort of market, that might be enough to keep me out. I think Perry wants a definitive answer: buy, hold, or sell. And you can tell by the fact that I am wavering here. I don't know if I'm game enough to buy it today, but I'm compelled because I can't find any other reason not to do this. I can't find a single reason not to do it. So I'll go plus 1/3. And people who know me and listen to me long enough know how I feel about that one. I mean, they know where I'm coming from. Let us head over here because we are going to check this one out on the valuation side of things. AGM. I'll just change that over. And Thomson Reuters Refinitiv Icon spreadsheet, of course, it gives us broker consensus. Thomson Reuters collects all the data, and then my fancy spreadsheet does some interesting things with that data. We know that the Thomson Reuters server is not that fast. But I'll type it in. We'll come back to it. Let us head back to here in the meantime. I thought I might have got lucky on that one. Okay, Perry's next suggestion, NRGX. Amazing. Looks great. What must I do, everybody, before I start doing my analysis? I've been very naughty. I shouldn't have even done that. I need to get back to my default zoom. I need to look at things on a like-for-like basis. I need to look at AGM, okay, and then I need to look at NRGX on a like-for-like basis. This looks very good. My guess is, my guess would be that it's not blue sky. I don't promise you I was going to say that, just from the sketchiness of some of these candles. I'm suspecting it's not. But there's nothing here really to bother me. I mean, that's a long time ago. PIMCO, Energy and Tactical Credit Opportunities. What a great name. Price action looks good. Trend looks good. It looks like a textbook setup to me. And let me just confirm that is good. And I'm just going to draw in the price action. And what I want to see in the price action is high peaks and high troughs by default, but I also want to see that there's nice separation between the last trough, which is going to be highlighted in light green, there you go, and the second from last peak, which is going to be highlighted in red, okay? So we know that that was a point of supply. This is why this is important, and this is a point of demand, okay? And it's very important for me to see that old points of supply are starting to act as a point of demand. It is a positive bull market trait. Is a positive trait of excess demand where pullbacks terminate at or above the previous point of supply, because that's you buy the dip coming in. There are people who got out here, they regret that decision and they want to buy back in, and they want to get in as close to where they got out as possible. The big fund managers know that stuff needs to come back. Nothing goes up in a straight line, and they know that that buying will come back in, and they want to get in ahead of that buying. Okay, if you've got to buy, I don't know, 15 million bucks of this stuff, you want to get it as cheap as possible. You don't want other people front running your order. You want other people getting in ahead of you. So you try and get in ahead of them to get your stock. okay? And the best time to buy is when other people are selling. That's why big funds buy pullbacks, but they want to do it at a point before they think other people are going to be getting in. This is why we want to make sure that last point of demand is at or above the second from last point of supply. That's a why thing. Candles look great. No objections on this. I think you all know where I'm going to go on this one. And it's a plus 1/3, 2 out of 2 for Perry. Let's head back and see if we've got the data here. We don't have many brokers though for Federal Agricultural Mortgage Group, just the two of them. Their average price target is $202.50. That allows 14% upside from the current price. One of them is at a strong buy and the other one's at a buy. Next place I like to go on my spreadsheet is the earnings per share line. I want to see the company, I want to see its ability to grow earnings through thick and thin. And we've had plenty of thick and thin over the last few years. Not quite. It's been a bit lumpy, to be fair. And we've got really sketchy data going forward to the point where I wouldn't even put a lot of faith in the fact that my spreadsheet using default settings, which is for me typically the best place to go. If I see something, see a reason, I know enough about the company to change it, I will change it, but otherwise default is the best. 181.17 is my fair value target, which is not a red flag for the chart. And then let's do NRGX. And if you're just tuning into my US session for the first time, I don't do every stock, I only do the ones that I could possibly be interested in, and we don't have any broker coverage on that one, so let us keep moving. I won't do Zillow, will I? Because I said I wasn't looking to buy it, and because I know that Perry is so good, I'm going to put in his third one now, and then it will load up while we look at its chart. And let's head over to WEE, which just double check WWE. Sorry, that's my fault. Oh, geez, that looks good too. Let me change in the spreadsheet there. You might have noticed I did type in WEE. So I'm going to fix that and then get back to your technical analysis. Looks great. I love this little consolidation breakout here, and it's a great little segue from the last to this one. We talk about why sometimes the price action compresses. And I hope that there's something back here, another point of supply. Well, there was, not where I wanted it to be. But look, quite often you'll see past points of supply act as futures points of supply, and you can get compression around that. I'm not going to even try and kid you to say that this is a delayed response to that compression. It just didn't work out that way this time. Why did it compress here? Look, sometimes, I'm not just making this up as I go, I promise you, and I'll say this to you again in the future, sometimes stuff gets to about 100 and it tends to pause as people sort of kind of in their minds deal with the fact that it's 100. It just is. But even then, that's more anecdotal than factual. I can't prove that to you with a set of numbers, for example. But otherwise, I like it when we break out of these tight consolidations. I like it when we do it with nice big white candles, and that's what we're seeing. The short-term trend is up. Long-term trend is very good. And again, I can't see any reason not to go plus 1/3 on this one. So having anticipated that Perry was going to give me the goods, let's head back over here. You're kidding. That's no idea. World Wrestling Entertainment. Okay. Big fan of the WWE when I was a kid. And there you go. How about that? Now, nine brokers covering. 113.56 is their price target, which means it's about fair value according to the big brokers, not my numbers. 3 strong buys, 3 buys, 4 holds, no sells, no strong sells. That's good. You know, there's nobody that looked at it, again, amongst the biggest, smartest broking houses in the world and said that they don't like it. So that's impressive for me. EPS line, this is going to be fascinating. I mean, surely they took a hit during COVID because people couldn't go to events, and they a little hit here, 2019 doesn't make sense to me, but 156, 207, that's amazing. I mean, that is amazing growth there. And a little bit of a flat one this year, but the growth expected to continue. Cannot see your screen. Thanks for that one. Not sure why. I can assure you, I'm in AB Broker. I don't know. So I'm in the right spreadsheet, and I don't know why that has occurred. Let me try. This is actually not my fault here. It's not that I have failed to change the screen. So what I might do is just boot it up again. This is a technical glitch beyond my control. I'm going to blame this one on OBS. And again, it's not coming back. You can see me flicking through the options, obviously, and that Excel is not coming back. Let me close Excel instead of just closing the window, and let me restart Excel. Sorry for this. And it's back. No idea there, sorry. And we'll see the spreadsheet load up again. It comes up by default with BHP. You'll see me go back in here and change it to US dollars. Very important. Okay, I'll close that up and I'll go back into WWE, Worldwide Wrestling Entertainment. .n is the suffix. It's going to have to load up again. Oh, did we just lose it? We lost it. Okay. Yeah, but you did see it come up though for a second, didn't you? It flashed. Okay. Well, we possibly have a bit of a conflict here that is potentially beyond my ability to resolve it. Oh, came back up and I just closed it. Oh, jeez. Okay, I'm going to try one more time. And if it doesn't work this time. So you can see that. I know you can see that. And then I go in here. And then I go here, change this to US dollars. Close that back up again. And you've lost it. It's at that point you lose it. But then it seems to come back. So let me just try one more time. No, technology's not working for me today. Okay, look, I'm so sorry about that. I don't think this has ever happened before. So not much I can do. We're just going to stick with the charts. I'm fascinated to do that. I'll post it on Twitter, Perry. I'll put that up for you with the default valuation. Okay. So let's keep moving then. Charts only from here, unfortunately. NEU. NewMarket Corp looks amazing. Stairway to heaven. In the interest of drawing my 10,000 arrows, that is the most amazing buy signal there. But I would have said both of those are buy signals as well. That one wouldn't have worked out. Here, I think, is very interesting. That's really good. This one is a buy signal for me. Here, all buys here. And even as late as this and today, I cannot fault it, and therefore I cannot do anything but go plus 1/3. Trends are great. Price action is immaculate in terms of blue sky. Actually, not blue sky, a little bit of a point of supply here, Perry, but certainly far enough away. And at 500, I think you do want to knock some profit out there if you do get there. Okay, but there's every chance it will. Thank you, Perry, for those 4 trading ideas. In fact, Perry's got a 5th, STRL. This one, I'm going to say, we did look at it a couple of months ago. You can see here where I'm guessing on this candle here, and on this candle here, where I've in session told you plus 1/3, and you can see I just undid that. But that's where I would have pointed to you prior to those 2 times saying that's the perfect candle. Let's leave the arrow there. It's come off very well. Hopefully some people got on it, made money. It's probably one of Perry's. Would I buy it today? No, it's too far away from my light green zone, and a little bit of an upper shadow there would just keep me away. Would I sell it? I don't think you need to. That's the thing. And it's not exactly at any sort of round number that actually means anything. 100's important. 80, I wouldn't say is all that important. So no, until you see black candles coming in, what will the black candles look like? They'll look like that or that. I don't think you need to do a whole lot, but hold and see what more you can get out of it. If you're really nervous, as in, I know making a nice big profit makes people nervous by default, you could take some off the table, but I wouldn't take off more than 1/3. That's just me. And to be honest, I wouldn't take any off at all. That's just amazing. Well done, Perry. If you gave me that one to look at last time, well done. Thank you. Appreciate it. ALB is Albermarle. Very interesting, very controversial company. The world's biggest lithium producer is my guess. That's what I've heard anyway. This one is for Adrianto. It was looking very good, I think, up until about here. But this does show you, I guess, the value of the system, or 2 ways to measure the value of the system. First and foremost, I'm not sure this would have been a buy signal here, just on the basis that we hadn't seen that telling point of demand occurring above the long-term trend zone. However, I'll be honest with you, I would have been happy to add some risk here. I think on that candle, if this was the best one on the day that you found, I can't see any reason why you couldn't add some risk. Okay, I would classify it as a highly speculative setup turnaround play, but highly speculative. Looked fine. Ideally, we do see that higher point of demand. What does point of demand mean? It just means that occurring above the long-term trend zone, just to confirm it. We didn't see it, and sometimes, not every time, but sometimes when that happens, you don't see that point of demand. It's just so much easier for the price to come back down and slice straight through that long-term trend zone again. And look, even if you did get in there, I think, there's a few places you could get out. I mean, those two candles together aren't great, but certainly when they're confirmed by this candle, if you did go plus 1/3 here, for example, then I think that's your exit there, minus 1/3. And that's it. You just don't need to look at Albermarle again. And then from there, it just really got worse and worse and worse. And hopefully you can see there, basically everything I've taught you confirms that there's no reason to own this company after that point. Short-term trend is still down, long-term trend is down. The candles are predominantly black. I mean, they're almost exclusively black. And again, supply is just so much in control of this, and demand is just not interested. Demand just wants to get the hell out of the way. Does that make sense? Like, demand just doesn't want to be a target for the selling that's here, and possibly can come down to 170. Buy, hold, sell on this. I can't see any reason to own this stock at all. Let me just say that. Unfortunately, Adrianto. BABA. Looks better. It's one we looked at here. There you go. It's sort of a cheeky little buy here, trying to get above the long-term trend zone. Did it form that hook? It actually did a pretty nice couple of nice candles here. I think I would have told you as interesting as these all of these candles look. You've got a pretty darn big point of supply here to deal with, and that is the biggest issue here. So that probably would have kept you out of it. Do I need to buy it today? No, I don't think so. There's nothing here really is all that compelling. This shadow here really confirms for me. And we talk often in these sessions about this word, or this concept really, how supply manifests itself in the market. And it's a really great example, isn't it? That upper shadow there, really supply manifesting itself in the market. We're still dealing with this point of supply. And I put to you, Adrian, until we close decisively above this point of supply, there's really no need to be in this. If you had it, look, and you loved it for whatever reason, I can see a path to holding it, but it is a rather tenuous path. And certainly I would say close beneath here, it would be all over for me on this one. I'd be conceding defeat and moving on to try and find something with a stronger setup. Okay, so it's pass for me on that one. Buy, hold, sell. I think I've told you it's not a buy. That's my opinion. Hold, I think I've given you what to do with it if you choose to hold it. Sell, no, I don't think it's a sell based upon that last candle. It's not so bad that I would call it a sell, like Albermarle, for example. LAC. This one I think is a sell. So here we're seeing problems with the lithium companies. If you don't know why we're seeing problems with the lithium companies, I know we do this on Thursday, but we've just had 2 lithium companies, so let's talk about it. We do have the price of lithium carbonate rolling over hard. Hey, you're seeing US lithium companies rolling over hard as well. There's the price of lithium hydroxide. What's really weird is the Aussie lithium companies haven't looked like this, and there's a bit of a disconnect, isn't it? The Aussie lithium companies, many of them have kept running, and yet the US ones are actually heeding those lower prices. Now, each one's going to be different production profiles, what their project is. Maybe they're not producing, but you can see they are responding very differently. And I think this sort of a chart makes more sense when you look at those lithium mineral prices. No redeeming features here. Absolutely not a single reason for me to own this stock. And in fact, I'm feeling more strongly enough about this one to actually call it a sell. I'm going to check on that. That still hasn't come back, which is frustrating. No idea how to make this reappear, unfortunately. You can see I want to get it back because I really want to do those valuations for you, but I'm sorry. Okay, let's keep moving. Thank you, Adrianto. Look, again, I know the risk is you come in these sessions, Carl beats you around the head a few times with there's absolutely, quote unquote, Carl just told me he can't see a single reason to own the company I own. It doesn't feel good, does it? It feels bad. But that doesn't mean you shouldn't show me the next one. This has got to be about you getting answers for your portfolio. This has got to be about you learning a different way. I'm not even going to say it's a better way of doing things, but it's a different way of doing things. And hopefully over time, do the due diligence on the way I think, on the way I act, and start to say, you know what, actually, some of the things he's saying is making sense. I can see how it works, and then adopt it a little bit, and hopefully you adopt it a lot. But hey, I'm not telling you how to do things. You've got to do it your way, the way that makes you feel comfortable. Okay, I'm not preaching that my way is the best way. That is foolish in the market. The market's going to teach you a lesson very quickly if you like that. If you get up here and say, my way is the best way, the market's going to make you look real stupid real quick. Applied Optoelectronics. What a great name. I'd buy it just for the name, ladies and gentlemen. Applied Opto. It just sounds so high-tech, doesn't it? But I could buy it on the chart. We didn't get a great deal of forewarning on this big white candle, but in the interest of drawing candles that I think you can buy, that's the one there. And I know it's absurd, isn't it, to look at that and go, oh, sure, I could never buy. I could never buy that thing. I mean, it's gone up so much. It's gone from $8 to $11. That's $3. That's 30-something% in a day. No, I can't buy that now. And the other thing is also saying, oh, it's stopped beneath the point of supply. I shouldn't buy it till it breaks out. And I think if you're going to play that game and buy it after it breaks out, I think you're going to give up a lot of profit in your life. But I look at that and say, look, there's a little bit of supply there, but overwhelmingly, I think positive. And I don't think the supply is all that concerned by this level. So I would say that's the level you buy. Pure coincidence, it turned out to be a right call in hindsight. Okay. Purely hindsight. But I can promise you, and I think if you know me well enough, I would have said that whether I knew the result or not. And I think this candle is equally as good. And again, some people are going to say, hey, surely you can't buy that. Oh, hey, I can. You can do whatever you want. I think that's a plus 1/3. But it's highly speculative. It's a mile away from the light green zone. And I think you go into this putting on an amount of money that you just so don't care about. Totally flippant. I talked about it. Was it this time last week? It was one of the sessions. I often say, look, whatever your vice is that you do on a Friday afternoon, I don't know, some of you might buy a pack of smokes on a Friday afternoon. Some of you might down a couple of pints of beer. I don't know what it is. You go to the pokies. But clearly you care so little about the money you're spending on that vice that you do it every week, right? So whatever that amount is, buy a fractional share. You can do it on our platform and just put that on. And hey, if you don't cry about the 2 pints of beer you had last Friday night, if you lose on this, you won't cry about it either. But if you turn that $20 into $100 because this does something amazing, at least it'll give you that positive reinforcement that you can buy charts like this. But be sensible of your allocation. I'm not telling you to put your house on that sort of a chart because it's so far away from the light green zone. Not subjectively, objectively, it's too far away from the light green zone. Let's look at Kellogg's. About as big a blue chip as you can get, really, isn't it? Kellogg's. Everybody knows what they do. You probably had something from this company for breakfast. I think this looks really awful. And I think many people would tell me that it is blue chip and it's defensive and it's safe. I would say the safest company you can own is one that's going up. And this is not the one that's going up. So again, I cannot see any redeeming features on this. I cannot see a single reason to own Kellogg Company. And if that means you want to short it, then I wouldn't stop you from shorting this one. It looks pretty awful to me. Brutal. This one looks good. I don't know if I'd be buying it. But you can see, how the methodology works. It's a pretty simple methodology, right? Double green, you're in the game. Price action's good, you're in the game. White candles, you're in the game. You don't have that stuff, just stay away. So we're in the game here. I'm not sure if I want to buy it just on the basis that candle and that candle annoys me. It annoys me, both of them. And we're not seeing the greatest, most emphatic comeback, are we? We saw it take out this little point of demand through here. That bothers me also. And this candle last night is really confirming that supply has arrived. And therefore, there's enough in there just to keep me out of this one. If I'm a new buyer, if I already have it, I'd be looking at a point. I think I just asked myself, would I be out 1/3? I'm trying to put myself in your shoes, and this is not for me to give you hindsight, but for me to give you foresight to say, okay, well, how do you respond the next time you see this scenario? And I think you're still probably full risk position here. and you're watching very closely a close beneath here. I think that's where you really have no choice. I mean, really no choice to lighten the load. And given the severity of some of these, and if we saw another big black candle tonight, actually, I mean, really any confirming candle of last night's candle is enough for me to actually go earlier than the close beneath there. And I'd like this idea for me of when something's going the wrong way, as quickly as possible, getting to just plus 1/3. And I love the way sometimes this Amy broker works. You can draw that candle in, and it kind of, your eye kind of in your brain, your subconscious goes, I can see how that could happen given the setup. And I just want to paint the picture in your mind to say, if you do see that, then really I think you're minus 1/3 before that. And then this is your second 1/3. And if you're down here, the most you've got left is 1/3. And I'm just going to give you an example. If you bought it, what are some nice candles here? This is a buy for me. This is a buy for me here. This is a buy for me. So let's say, just use shares. Let's say you bought 2 shares here. You bought 2 shares here. You bought 2 shares here. If you didn't minus 1/3 there, this would be minus 2 shares. What's 1/3 of 6 is it's 2 shares. We've got 2 ins. And then you're minus 2 here, and the most you'd have is plus 2 remaining here. And the only reason why you're keeping that final plus 1/3 is because the long-term trend is up. Overall, clearly the company's got something going for it, and you may not wait the whole way down to close out that 1/3. But I like this idea of just as a safety measure, especially given the market's not so great, just getting to that 1/3 remaining as quickly as possible. Getting some cash out, and then there's every chance tomorrow or tonight in the US we get a huge white candle. I mean, would that really surprise any of you? You know what the Nasdaq's like. I still think we're in a bull market, and all the way up, every time the naysayers neighed because there was a tiny black candle, or the next day was white, and it was just a monster. The Nasdaq can turn it on like that. This is why. If we've got some nice charts, they've got a track record of performing well, you still want to have that little bit of skin in the game. Anyway, one way to look at the market. NEE. We've got some problems here. Trianto. Actually, I don't think I did this one for you last time. And you're on a bit of a roll today. Not in a good way. This is I cannot see any redeeming features unless you're giving me these for shorts, because you've given me 4 cracker shorts: Albermarle, LICY, that other lithium company, Kellogg's, and NEE. They are just abysmal in terms of longs, but that by default makes them incredible in terms of shorts. We kind of touched on this concept, didn't we? We touched on this concept last week when we went over here, and I hope this bloody works. We went over here into the ThinkMarkets platform, and we hedged. We did that Nasdaq hedge, and it's only making it's making $80, right? And we did, I think, 0.3, tiny position, and you could have done more if you've got a bigger long position. But that $80, will come in handy in paying off some of those losses. But the other way you can do it, and I like hedging the index because you get everything. But we've talked about this concept of, Kellogg's looks awful. And, we could short this thing as well. We could do an index level hedge, or we could put in a few companies which we don't think look very good. And you can see here, I love this platform. I love our product offering. I wouldn't work here if I didn't feel this was the best out there. This ability to do fractional shares. You can get your trades tiny, everyone. You can be that hedge fund with as many trades as you want in the system. So I can do 0.3. And then this will be really interesting for you. I must click this button first so I tell the platform that I want to sell. And then it's a matter of dragging up this red line, which is my stop loss line. Now I have to drag it up. In many sessions, we dragged it down because we've been going long. I'm going short here, so I need to drag it up. And I reckon just above here is probably pretty good. See that upper shadow? Big red candle here, shadows. Around about there, I reckon you could go 65.47. And I'm risking 92 cents on this trade, okay? Because I'm doing 0.3 of a Kellogg's trade. Now, tick that up to whatever you want to do. If I could do 3 shares, okay? I could do as few as 3 shares. And I'm risking, let's remember how that is all out of whack. Let's change that to 7. Now I'm risking $9.20, okay, on the 3 shares, obviously 10 times as much. But I can really tailor this position to any trade size I want using our platform and start to offset some of that long side risk by looking at some of these short trades. And what was the other one there? Nextera NEE, which is in here. Lo and behold, there it is, and you can go through the same process. This one, I think you can probably even get a tighter stop loss on this one. And if it gets back above, that's not the entry. I've just got the wrong slider there. Let me get that one out of the way. Oh, I haven't put in. That's why it's not letting me do it. There you go. And I need to turn this on. Carl, wake up. And now we've got it's all invalid because I've messed it up. Let me go. Let me try that again. I'm just showing you how not to use the platform. That was absolutely deliberate. That's how you don't do it. But we're going to go, oh, geez. Not having much luck today. Let's go over here. I think I made my point. So we don't often talk about this because I think you've been following me probably for 6 months that I've been doing these webinars, and the market's been going up, and I've been picking stuff going up. And, you know, what a great time to cut our teeth and learn about some of these other concepts like hedging. Okay, I'm going to go to the streamers. I've been so naughty that I haven't been looking. I do apologize that you do get lost sometimes. Okay, T is down. AT&T. Let's head over there. Oh, you know, there you go. It's another short opportunity. Neil saying shorter. Neil, you cracked me up. Yesterday, I saw your comment down the bottom of the YouTube video that said, I'm not nodding. And if you're in yesterday's session, you know what that means. I think look, I can't see why you can't short it, Neil. I mean, I'm so impressed. Like, I've just got goosebumps that the fact you're even asking me about this. I just love the way that you're thinking. I can't see why you can't short that one. I think the other ones actually look worse though. I think Kellogg's and NEE look worse, which means they look better for shorts. But I can't see why you can't short that one. JLG for a long, says Janelle. Janelle, welcome. You are new. I've not seen your name before. JLG. I don't have a JLG, Janelle, so just double check that one for me. JLG, not on my list. Let me go to all. Might be an over-the-counter stock, unless you're asking about John's Ling Group in Australia. Janelle, this is strictly for US shares. Please come back on Tuesday. We do all the Aussie shares, okay? But you'll learn here my methodology, which will help you answer your own question on that one, okay? I don't want to seem nasty by not doing it, but it's just the function of what this session is about. It's for people who want to know about US shares, so we're not going to waste our time with Aussie shares. I like this one. I think it looks really good. Let me just quickly zoom out and see the nature of it. What's the nature of the beast? It's more of a turnaround play. I'm therefore looking at something like this. I've just got my eye getting cast back over here. Looks like we're through that one. That's a big tick for me. I love the trend. I love the short-term trend. This is all going well. Look at that little bounce off there. You never would have picked it with that candle, and look at that candle coming in next. This is turning around. We've got our hooks coming in at or above that long-term trend zone. It all looks very good. The only thing that's holding back, a little bit of an upper shadow last night. Not sure if the reward to risk up to that point of supply is all that fantastic. It's a very warm. I haven't done this thing where I sort of give you a score out of 10, but I think it's like a 7 out of 10, maybe a 7.5 out of 10. Now that you've heard me talk about this one, Kirsty, go back and think about some of the other ones. Were they 8 out of 10 or 9 out of 10 or 10 out of 10? Were they better? Hey, if you've got this, happy holder, no doubt. Watch that point of supply, black candles, upper shadows up there, taking a bit off the table. If you do have it, maybe somewhere down here or on some black, obviously it starts doing this, then you're taking risk off the table, but no, happy holder, not a buy. I'm just going to pull back from calling that a buy, okay? I'm not sure if that's the best one we're going to see today, but thank you for suggesting it. LICY, Life Cycle Holdings, very interesting. Not quite there yet for me. I can see that it's trying to turn around. I can see also that it's struggling in that turnaround. So when we look in, we sort of zoom in here. We can zoom out first. And what we'll see straight away is just how powerful this long-term trend zone is at pushing prices down. Ladies and gentlemen, I implore you. I was going to show you how good it is in pushing prices up. We just don't have enough data. But certainly, look at that. So we need to tread carefully around the zone. Okay, you can see failed again here. Have we got that decisive, that definitive hook above? I call it a hook because it's, I don't know, does it even make sense? A hook above? Is that a hook? This is what I need to see to upgrade this to a buy, and we're not seeing it. In fact, if anything, we look like we're more falling back into this long-term downtrend, and potentially last night's candle with that upper shadow is telling me that we might be pushing back down through here again, and that could be a problem. So look, I can't buy it. Look, if you love it, this is your favorite company in the world because you know all about it. Good luck to you. I'm not interested. All right, that's just me. I can see a path to holding it on the basis that you love it. But let me tell you, because I can't hold this. This cannot be even a plus 1/3 in my book. But I'd be very cautious beneath here. Okay, if it comes down, closes beneath there, you've got real problems because it's falling back into that long-term trend. Okay, in the interest of paying back the very, very patient streamers who I neglected on Tuesday, I'm going to do all of yours now. NEU coming from French NZ, which is one we talked about. Perry had that one. So French NZ, if you're on the same wavelength as Perry, you're probably okay. KOP, I think this looks very good. In fact, I think this looks very good. I'm a very simple creature, right? I'm a binary creature. Look at all these white candles. It's just amazing. I mean, there's just so many white candles here. Last night's candle, not that great, but there's so many white candles. I actually don't think I want to fuss around too much. I'm going to go plus 1/3. Look, if you're a bit more conservative, just wait for another white candle before, but I'm pretty happy with that one. And I'm happy with the rest of it as well. It's not just the white candles. I mean, I like the fact that we are in a wonderful short-term uptrend, just wonderful. Long-term trend, you can see that long-term trend zone holding. We didn't get the hook here. See, we didn't get the hook down. Yes, it's a spongy zone, but we didn't get the hook down. We actually went up. That's good. Dare I go back and see if we get the long-term trend holding here? Didn't hold a lot. It wasn't around long enough to get one. Interesting to look at that. It is a bit of a temperamental beast, isn't it? Price action. Let's go here, here, here. There is one here, I assure you. Then there's one here, 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 and here. And I think they're all fine. I know that trough's a little bit beneath there, but it's such a big white candle. It's so fine. Plus 1/3 for me. Koppers Holdings. Thank you, French NZ. TREX. Which looks very good. This is the synthetic timber company, Trex decking. Check these guys out for my deck not that long ago. We went with mill boards. Go check that out. Looks fine. It's very much a construction-related company, isn't it? So it's going to be tied to the health of the US housing industry if I've got the right one. And I like this. I like this. I like the price action. So in terms of drawing in peaks and troughs, and I know I can do this maybe a little bit quicker than you can, but I assure you, if you take your time, you'll get to the same conclusion I am. There's a little one in there, little one in there, coming back here, and there's actually a little one in there. So a little bit of compression here. This is all fine here. You can see how that's all holding above there. Big white shadow. Look, it's all good. I'm not a buyer tonight on the basis of that upper shadow. I think that's enough to keep me from buying. But look, on the next white candle, the next lower shadow, I could certainly see myself getting involved in this one. So what is that going to look like? It's going to look like that. And then it's going to look like this. And then I could happily go plus 1/3, but just on the basis of the last candle, not for me tonight. But if you've got a happy holder, where does your thesis on holding change? This big black candle is a little concerning. I don't want to see it get reinforced anywhere down the track, okay? So beneath that, I think you want to take the precaution of close, because it's also matching up with that lower shadow as well. Close less than is minus 1/3. And yeah, don't just use the black candle low, definitely down here. That's where you'd be starting to manage your risk on that one, French NZ. And then OC is his fourth one, and that looks very good. I'm quite certain if I keep zooming out, I won't find anything. So all happy with that one. And many buy signals through here. Even that candle is a buy signal. That one could have closed a bit higher, but still fine. That's fine. That's fine. Even that's fine there. And no complaints on holding. I'm going to go ditto on the last one. Just give me a white candle. Just give me any candle that closes above that. Okay. And then I'm going to go plus 1/3. Until then, I think we'll just be a happy holder. No reason to do anything but hold on to this one. And where would I start to be concerned? Look, I don't think you want to see it. I know it's a little bit pedantic, but certainly here is beneath here, close beneath there with a big black candle would worry me. Close beneath the light green zone would worry me. And then you might just give the remaining 1/3 a bit of a wide berth after that one. Okay. Let's go to Rupam, who's asking about NIO, which has just pulled back a bit, hasn't it? And what's concerning about this pullback? We've got a few scratchings in here. Let me get rid of that one, and let's get rid of that one as well. This black candle is a nasty one. Is that enough to get me out 1/3? Well, I think when you look at where it's forming, and I may have even told you about this, Rupam, maybe even said that the last time I looked at it for you, is if you see a big black candle, I wonder, go check the tape, probably said it. If you see a big black candle near that point of supply, that's a bad sign. That black candle in isolation by itself in a big uptrend, it's disturbing, don't get me wrong, but probably not enough to get you out. But when you see it there, I think you do go. I mean, what do you think? I have said to you in the past, it's not a black box system. It does take a little bit of interpretation. This candle's fine. And then this gap down here is not great, but lower shadow probably keeps you in. This wipeout, I talked about yesterday, the market eating the tail of a candle, and then the confirmation. I reckon I'm a minus 1/3, a second minus 1/3, just as a precautionary measure. This is just where I'm at. Now, this is general advice. Of course, you need to do what you need to do. But I just think on that candle, I'll go minus 1/3, and that leaves me at plus 1/3 on this one. So I'm not carrying a full risk position. I've still got some skin in the game. If it turns back up tomorrow, will I be annoyed? So let's say I got out on the open tonight, or I got out, preferably, you sort of get up early in the morning, get out just before the close of the candle here. And then tonight's a big white candle. Would I be frustrated? I'd be frustrated I got out 1/3, but I've still got 1/3. And if I need to get back in, I can get back in. Don't take it personally. Let's go to NKLA, Nikola. We do have some problems here as well. The fact that we've closed beneath there is not good. And then the two, I'm buyers off the table here. Buyers absolutely off the table. I think you've got all sorts of reasons through here to have already managed your risk up to this point. And if you have it, I can see every reason to do so. Let me just summarize by saying I cannot see any path to having a full risk position on this stock right now. And I could be wrong tomorrow. It's trading at $4. I don't know. I don't know the future. Please understand that. I cannot see the future. But what I can say is based upon the evidence from demand supply and my experience, I cannot see a path to having a full risk position on this at all. Time to close positions, says Rupam. I think I've answered that question. AI is the last one, and we talked about this last week. So this one I actually have scratchings on. Rupam, if you say, is it time to? I'd say it was time to if you are following my analysis. If you haven't followed my analysis, it's always a good time to start. Can I have Perry's stock screener, please? I wonder if Perry will share it with me offline, and then maybe I can share it with you, but that's up to Perry. Perry is certainly doing a great job at finding those opportunities. I did a BORR, I think, Nikola. I'll go back to my Zoomers now. I definitely did that one for you. And NWLI, there we go. Oh, she's left that. National Western Life. This one is for Perry again. Hi, Carl, if you have time. I've always got time for you, Perry. How are we going on time? We are getting close, aren't we, to the hour. Looks great. Can't fault it. No reason why I wouldn't buy it. Just keep an eye out for $500 because that's the only real next point of supply that you would deal with. But otherwise, yeah, it's going to be a little bit slow and steady, isn't it? But plus 1/3. I love this gap. I think it's amazing. And I've said to you maybe 6 months ago, when you first started listening to me, you probably heard me say something like, I love gaps. I love gaps and big white candles. And there are studies, and go Google them, that show that when you have big earnings surprise, big earnings beat, you often get this sort of price action. But if you look down the track and they look at the 6 months down the track, 12 months down the track, the stock tends to be higher, statistically speaking. So I read something like that and I go, okay, well, that's something I want to trade. That's a concept I want to be part of. CCJ, buy-in point. Look, I think it looks fine. Looks like we've covered this a few times, and there you go. What a great segue. I think I covered it on maybe this day here, and I probably said to you, I like big white candles. I'm happy to go plus 1/3. I'm guessing it was here. I can't see that 1/3 hovering anywhere else. And if you've got it, I think you can hold it from there. I think this is a really important candle here, this long lower shadow. Would have loved to, this is a very good candle here. This is not a great candle though. Look, absolutely holding what you've got on it. Do you still have a full risk position on this? I think that you're still holding a full risk position, but where does that change? I think that changes beneath here. I think if you are beneath that, then you're starting to manage your risk. So close less than is minus 1/3. And until then, just a happy holder. I'm not buying it on the basis that candle last night isn't sufficiently bullish to make me want to buy it tonight, if that makes any sense. That is for Jill, and Haraju has Nikola. I have a short position. Oh, Haraju's got a short position in Nikola. Okay, so that's what was that? NKLA. There you go. Okay. Yes, I can see it. But maybe we've seen better ones. This one is trying to turn the corner as well. ONON. Fascinating. Looks good. What do we say? Look at this. What's going on here? What do we say there? Plus 1/3. Oh, look, if we get a big white candle, plus 1/3, didn't quite get it. In fact, didn't really get a good enough candle to do it. That one's not bad. Interesting. Just the last time we covered it. Covering it now, it's not much above that. Big black candle, big white candle. Okay, those two sort of negate each other. This is good. This is good. I think it's going to be like many I've talked about today, Nikola, where just that last candle's keeping me out. If you've got it, hold it. I can't see any reason why you can't hold it. That's my view. You do what you have to do. But yeah, just not enough evidence in that last black candle of the demand that I require, the excess demand I require to get me in. But happy holder. Where does that change? Well, obviously beneath here, you're going to have some big issues. So close less than, that would be minus 1/3. And this is how these sessions work. You ask me about your favorite stocks. You ask me this week, you ask me next week, you ask me the week after. No problems at all. And AMGN, this one is for John. And I think this is going to be the last one today because I've covered everybody's requests. Interesting. I probably would have said the last buy for me is here. That's the buy. But even then, I'm not sure if I would have actually gone for that just on that. Yeah, no, it's strong enough. Didn't look like that tomorrow. Yeah, I think that's a buy. I think that's probably your plus 1/3. Some people might not like it, but no, I think that's fine. If you did get in there, I would hold it. None of these three candles are so sinister to warrant an exit. I know if you just look at this candle in isolation, you say that's not very bullish. You'd almost say that's quite bearish. You'd almost say that one's bearish, but they're small. They're small with respect to how far we've come. There's a little bit of supply. Literally, you can tell. Oh, how much supply is in the market for Amgen? Oh, there's a little bit. There's a little. How do you know there's a little bit? Well, just look, there's just a little bit. Okay, well, that's not too bad. I'm not too fussed. I'm not frightened by that. Okay, if I saw something like this candle, I know then there's a lot of supply in the market. Okay, well, this candle, or this candle. So no, I think it's a little bit of supply. If you've got it, happy holder. Would I buy it? No, I can't buy it because there's a little bit of supply in the market. You get where I'm coming from. We've got a couple of late ones coming in here from Ghost Trick on ES. Yeah, this is I wonder now if we're getting short trades coming through because that's a cracker. That is a monster of a short trade there. Eversource. Wouldn't have a clue what they do, nor do I care. But yes, for me, if that's what you want to short, that is definitely a short trade. If you ask me about it because you want to go long, then I would say, no, not for my money. NQ. I don't have an NQ in here. Sorry for you, Ghost Trick. Oh, no, S&P 500. Well, I'll tell you what, you could short ES. As far as shorting the S&P 500, that's more of a Thursday conversation. And the answer I gave you yesterday, because I think we discussed this idea of shorting the indices. I'm happy to short these indices only on the basis that it is a hedge position against my long positions. If I had no long positions, then no, I cannot short these indices because of this long-term uptrend. I'm just not ready to do that yet. Hopefully that answers your question. And that goes for both the QQQs, you asked me about the NASDAQ, and then the ES, which is the SP500. Yeah, I think there's some more downside here. I think last night's candle on both of those indices is extremely bearish. I think SP500 looks very bearish. But no, I'm not a shorter as a trader. I'm a shorter as a hedger. Okay, that is it for us today. Let's head back over here. Didn't get any of the usual suspects, did we? Your Microsofts or your Nvidias and things like that. But I'm always interested to see what you're interested in. If you want to come back on Tuesday, somebody asked me about an Aussie stock. That's when you do it 1 p.m. That's where you register for it. Thursdays, we do all the macro stuff. We talk about the NASDAQ. We talk about the SP500. We talk about hedging strategies when we need to. That's where you do it. And, of course, you're here in the Friday one. If you are not a client of ThinkMarkets, well, you should be. We have everything you need to trade. You can trade Aussie shares here, Chess sponsored. You can trade those US shares using our CFD products, and they are commission free. That's what's even better. We talked about those fractional shares. I structured a trade with 0.3 of a share, risking 97 cents. You can tailor it to whatever you want. You can truly have a hedge fund, run a hedge fund with longs, with shorts, and with just as much risk as you're prepared to take. Commission free. It's going to save you a pile of dough. Market leading spreads. Plus you can trade Forex, indices, commodities, futures, crypto. Cannot see a reason why you wouldn't open an account with us, or at the very least a demo account to see how it all works. We're an award-winning broker. We do have the best platforms. They keep winning awards. Dedicated account manager with 24/7 customer support and the ability to call us up on a phone. You don't have to chat bot away there with ChatGPT. ChatGPT, there's something wrong with my account, and it tells you how to make a cup of coffee. Not good enough for the other brokers, but we sort your problems out as soon as possible. If you're watching me on any of the streaming services, hit the subscribe button. I do go live many times during the week, so if you catch one, you can stay up to date. Hit the thumbs up button, very important, to let me know you like what I'm doing, so I continue to do more of it. Apart from that, it's been a pleasure chatting with you today. All the best for your trading and investing. Do a catch up again. Bye-bye for now. But before you leave, don't forget everything we've discussed today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this general advice, consider it carefully or seek the help of a financial professional. The rest of the information in that disclaimer is important. You should read it very carefully. And if you have any questions at all, give us a call or head to the website, download our PDS, our Product Disclosure Guide, or our FSG, our Financial Services Guide. Bye-bye.